Great, fantastic. Okay, well, let's make a start. This week, I'm going to be basically talking to you about what trades we're in and how they're doing, and giving you a preview into our watch list, what I've shared with my members, our paying clients, and give you a real kind of like insight into the market through the lens of the Lazy Trader. So, for those of you who don't already know me, my name is Rob Colville, founder of thelazytrader.com. I've been trading for about 7, 8, 9 years now. Made every single mistake in the book several times over, and really learnt the hard way of becoming a consistent trader. And through my suffering in the early days, I came to realize rather rapidly that trading can be made simple and it can fit into your lifestyle. And this is why I've developed stance trading, which you can trade from as little as 10 minutes a day from just trading the hard time frames. Sure, there's a lot more to life than looking at bars on a chart, and you can make as much from trading the hard time frames in the set and forget style as you can trading intraday. And there's a huge misconception amongst a lot of people out there thinking that they have to be in front of the screen all day trading as many trades as they can in order to get good and profitable at trading. That's not the case. Okay, so about 5 years ago, excuse me, I've got a bit of a cough. I set up the lazytrader.com and I've taught people, thousands of people around the world, how to successfully trade. And we have had a great deal of success in doing that. And through trading and setting up this online training brand, it's enabled me to really kind of concentrate on what interests me in real life, like, for example, traveling, photography, tennis. And of course, I help disadvantaged young budding entrepreneurs at the Prince's Trust based in London. Okay, so that's enough about me. I'm pretty sure you didn't take time out of your Monday afternoon to hear about me prattle on about myself all day. So let's move into the pith of this presentation, okay? And I really want to share with you what I shared with my clients over the weekend. And there are some good moves setting up, chiefly in oil, and I'm just going to share that with you right now.
This is Rob presenting your Market Insider, which will reveal to you and discuss the trades we're in, how they're doing, and we'll discuss what is looking good for the watch list for the days and weeks imminent. But first things first, I just want to talk to you about August being historically the time of the year where a lot of the bigger players go away, they bugger off for their holidays, and subsequently markets get very sluggish, they tend to lose order, lots of unexplained spikes, and no real rhyme or reason or rhythm behind them. Okay, so this is why, well, unsurprisingly, we haven't seen that many in the way of clear, lucid setups of decent reward to risk. But hey, it's been like this most years, and if we do still see a setup which fulfills our rules for entry, and the context is good, then we'll still take it regardless. Because after all, when you're backtesting a strategy, I can certainly assure you that the backtester does not take into account the month, or indeed what news announcements were released on that day, or what was said by who. Most automated backtesters, or mechanical backtesters should I say, will tend to look at the price action only. Every chart tells a story, not least Singapore dollar versus the Japanese yen. Now, we took this several weeks ago, and this is the only trade we're currently in at the moment, short, based on the break of low of this ring high bearish pin bar reversal, which has tested twice before, or 3 times before, shall I say, this dynamic level of resistance in the form of the 20 moving average. You've got once, twice, thrice, fourth test. And this gives a simple opportunity on the weekly time frame to simply sell the rally in a prevailing downward trend. Now, this trend wasn't established by the medium-term buyers and sellers, given that the 50 hasn't crossed over the 200. However, the 20 has, and we are, by and large, making lower highs and lower lows. And given that, as we mentioned last week and the year before, there is historical strength of the Japanese yen at this time of year, all the way until October, my apologies, then it makes sense to leverage that and really look to sell anything paired with the yen, providing we've got the technical entry. And this is what we had 2 weeks ago. So as you can see, we're in our second week of profit here. We've had 2 subsequent seller bars on the weekly time frame. So For those of you who haven't already got your stop loss to break even, I really hope you have. But for those people who are managing this trade, and remember, there's a difference between lazy trading and doing nothing. And we obviously don't want to fall into the trap as lazy traders and doing nothing and just being complacent. Okay, so there's one thing about being diligent and hands-off, also reckless hands-off. Okay, so we have to form into the safer camp. So what we can do, true to our conventional method of trading stop loss, is moving our stop loss to the high of this week and locking in profit there. We'd lock in a decent 2% gain by doing that. If you're an all or nothing trader and you just want a profitable outcome or nothing, then you might as well just leave your stop loss at break even in anticipation of price coming down the previous spike here, last seen towards the end of June. Unsurprisingly, that's the Brexit bar, the referendum. So besides the point there, so that is the previous swing low. Do we have any levels in the way of obstructing this, by and large? Not really, actually. I mean, 72, if we look over the past 7 years, we can't really see that much in the form of levels in the way, which is great because it means that we are still good to go down even more with this one. Okay, so when managing your trade, there's always a bit of a trade-off. What kind of a trader are you? Are you someone who likes higher probability and are content with reaping a lower reward for that higher probability outcome, or are you someone who'd rather have a high reward outcome but are content with a low probability in getting that high reward outcome? The choice is absolutely yours, and there are various methods of trading this, like I just mentioned, and it all depends on your risk appetite. Psychologically, I think we're more predisposed to wanting smaller rewards but more of them, rather than lots of break-evens, lots of losses, and that huge, enormous win, because you never know when that win's going to come, and by the time you've drawn down and drawn down and drawn down, you might just lose hope. So always good for the spirit and the soul to go for a mixture of both. One way you can do that is scaling out. So if price, depending on whether you're a high probability trader who wants or happy to accept a lower reward, you can have the best of both worlds by simply scaling out of this low here, just in advance, just above 74, buying back half the position and leaving the remaining half to run. That's a good best of both worlds trade, and then you've still got some exposure to the historical strength of the yen at this time of year. Okay, so that concludes our Singapore yen. If you've decided to take dollar yen or Aussie yen instead, or as in addition to, then pretty much the same logic applies. Don't think too hard about that. Okay, so let's move on, because we've got nothing else currently live at the moment. We are managing to sit on our hands, and we're enjoying lots of the sun in Putney, England. And why should we force the market if there are no trades? August is notorious for being light on trades, and we're not going to trade unless we see something which the fundamentals and the technicals both back up, and we've got decent reward as ever. Okay, so let's take a look at some other opportunities forthcoming. I just want to take a quick look at crude oil. Okay, now we've got an interesting reversal here for those people who like reversal trades. I know a slim minority of you do. However, this week here, there's closing on crude oil as a bullish pin bar reversal, which correlates with the level $40 a barrel. Now, what is interesting about this is if we fire long here, bearing in mind this is potentially a ring low opportunity to buy. It corresponds to a level here. Let me draw that one in. And we had a 50% retracement from the all-time low. Sorry, from the very low. There we go, $40. We've seen a decent level right here. If we take a look, we can see that this could potentially be viewed as a head and shoulders formation. Look at it. It looks very, very, very handsome in terms of a bullish reversal pattern. So you've got the left-hand shoulder here, the head, and the right-hand shoulder. And what is more of this one here, crude oil, is the fact that we've got a 50% Fibonacci retracement, which is typically the retracement you get prior to an extension. We could see this continue as an ABCD formation. And if that happens, then that's going to draw A to B equals C to D. Typically, we've got symmetry. Okay, so you've got A, B, C, D. It's a three-way formation. So let's copy this one and see where the projection would be. There we go. Let's move that down here. That kind of makes sense because it really completes within the $60 a barrel territory, which is a level up here. I'm only expected to break above this point here. However, we've got some upside potential gain here if we did decide to take this one as a ring low opportunity long. As Julian said a few months ago, he would expect oil to faff around for a bit longer before potentially continuing down, rather than a strict continuation to the downside. We've seen the double bottom here. We rode it all the way up to quite recently, up to this point here. And then we cashed out our profits. And now we've seen the retracement, and now we can potentially go in long again. We've got the level, we've got a 50% retracement. What is the smaller time frame saying? Let's have a look on the hourly or 4 hourly. Let's have a look at the 4 hourly, as this is on the weekly time frame. Okay, so we've broken above this dynamic level of resistance in the form of the 20 moving average. You've got the higher low here on the 4 hourly. Could this give us a point of acceleration? Let's draw down to the 60 minutes and see what that's saying as well. Yeah, we've broken into an upward trend, or short-term upward trend on the hourly. Let's have a look on the daily. Remember that the smaller time frames are the bigger cogs in the wheel. Sorry, the smaller cogs in the wheel turning the bigger wheels. Okay, and that's important. Okay, so we've got a sharp rejection of this level of oil, certainly on the daily. But let's have a look. Let's go back to the weekly. What is interesting about this one is if we decided to trade it with our entry above the high of this week's close, like right about here, if our stop was below the low, got roughly a 3 to 1 before the previous swing high. That's good enough. Also, if we did place our order above the high around about here, then if we're triggered into the trade, that's a significant event because we can see that the highs of the previous 1, 2, 3, 4, 5, 6 weeks has not been breached. So if it's breached this week, well, next week, if this week's high is breached next week, that would be a significant event in itself. Okay, and this could be seen as a simple flag or retracement prior to an extended leg. If we visit our friends at Equity Clock, and we're frequent patrons of this site, or visitors of this site, should we say, traditionally, crude oil futures have been bullish in August, September, until they turn around about October, November. So could this represent the last hurrah for oil before potential bounce at this level and a move to reversion back to the mean, back into the range, or indeed the continuation of the protracted downward trend? Well, the reward to risk is certainly there to speculate one way or the other. Okay, so on one hand, we've got seasonality, we've got the technical factors pointing to a reversal long. Remember that reversal trades are far less likely in coming through than trend-based trades, so I just want to throw that caveat into the mix, and it's entirely up to you whether you like the look of trading it or not. So in plain sight, it looks like a bullish reversal pattern, rejecting this soft level of support, bullish reversal pattern, bullish signal bar in the form of bullish 50% retracements, and yeah, the high of the previous 1, 2, 3, 4, 5, 6 bars has not been breached. If it does this time round, then we could be in for a 3 to 1 trade if price does push to the previous high. Okay, so moving on from crude oil, this is related to the FTSE. I know this is not currencies per se, but it doesn't really matter. We're just discussing the how these asset classes are related. We go to the FTSE here. We'll see that we're continuing our march to the upside. This is by no means down to the Bank of England. Well, no small measure down to the Bank of England reducing interest rates very marginally earlier this week. So we've got a big bullish pin bar reversal, taking out the highs and lows of the previous 2 bars. So that's quite a bullish sign. Still pushing up to this penultimate all-time high. And remember that when equities rally, oil tends to do the same. And that's a historical kind of correlation there, because if stocks are rising in value, that's a sign that the economy is growing, and what do economies need to grow? Oil. It's a lubricant to economic growth. Okay, so once again, though, for those reversal trends, as if and when the FTSE does get to this ultimate all-time high, waiting for a reversal. Okay, a reversal is a lot less likely to happen, but if it does work out, it can be very lucrative. Look at all the reversals we had throughout 2014. We had a sell here, sell here, sell here, numerous sells on the daily time frame or the weekly, based on supply and demand trading and, of course, price action based trading. Okay, of course.
So that is looking at oil. We've got had a very good setup on oil last week, and that's triggered. In terms of currencies, we haven't really seen that much going on, unfortunately. But like I mentioned to you earlier, currencies have traditionally been very sluggish throughout summertime, August in particular. We are looking still at the yen-based pairs in terms of downtrending currencies. If you look on the weekly, very obviously we can see that there are key lower highs and lower lows. This is the case amongst all yen-based pairs. Over at Singapore yen, which is the one we're in, dollar yen, Aussie yen even. One thing we are waiting for is a pullback, a decisive pullback with gold or silver or silver. Let me just get to that first. Let me show you. There we go. There we go, gold. So we're in a bit of a choppy range at the moment. This is the weekly time frame. But what we want to happen ideally is for price just to pull back and make a higher low, and then we can potentially get a long trigger in the form of a bullish pin bar reversal to be our signal, our entry to actually get into the trade. Okay, so that is something which we are waiting for. We could get this on the daily or the weekly time frame. It really does depend. Let's see on the daily. Okay, the daily is still very indecisive as well. We've got this precious metal snaking upwards oh so gradually. So yeah, on the watch list for that very reason. Okay, gold and the weekly time frame. I'll say the weekly time frame in these kind of months, typically one of the better time frames because you see a lot more clarity on that time frame. Okay, that's very important to get clarity. Sometimes the daily can be pretty choppy, and indeed it is very choppy. Okay, so I would say the weekly you get clarity, you get the strength of the move behind you as well. Generally, the harder the time frame, the clearer the setup. It's as simple as that. Okay. So let's move on. I just want to talk to you about cable and the British pound. The British pound crosses. We're still looking to sell any rallies which come into our orbit. Of course, the British pound versus the US dollar hasn't really been given a chance to retrace by any stretch of the imagination at all. We've retraced about less than 20% of the way since Brexit against the US dollar, and we've just been in this kind of zone of hesitation. Not much has actually happened. We haven't seen much volatility since. Meanwhile, the FTSE has been rallying, whilst the British pound has been falling in value. This is probably down to the fact that because of the favourable exchange rate for foreign investors, British stocks have never been quite so cheap. However, how long that will last, we'll have to find out. We still need to wait for Article 50 to be pressed by the British government. Theresa May, for example, as the new Prime Minister. But until then, we're just simply waiting. Like I mentioned with gold, we're waiting for a long. The Australian dollar is correlated with gold, so we're waiting for a potential long on the Aussie dollar. They're very correlated, given that Australia produces so much gold. It's like the Canadian dollar is very heavily intertwined with oil because it produces so much oil. Okay, so in terms of currencies, we are just simply waiting to sell the rally for any of the British crosses. Let's go down to a few of them, like the British pound versus the yen. Okay, that trade's already in progress. Let's go to pound NOK, which is a traditional favourite of ours. We bought it all the way back at the bottom. We picked the very bottom of the market all the way back in 2013, all the way down here, and we rode it all the way up here. Okay, so that's besides the point. Okay, so I just want to talk to you about the some of the dollar-based pairs. US dollar NOK, for example, or US dollar SEK. We're just waiting to find that one. Unfortunately, someone's jumbled up all of these currencies, and it's not quite as easy trawling through them as it has been in previous weeks. So here we go. This is dollar SEK. on the weekly time frame, we're still in this fantastic rectangle box here. And, you know, any of you who look at Wyckoff, accumulation distribution, this is too protracted for it to be a reversal. It could be a continuation, it could be a reversal, which isn't particularly helpful to say that because it's just simply inferring that the market could go up and it could go down. And of course, that is true. The market can do anything like that. But probability has it, looking at this well-contained range here, that price that gets up to this horizontal level is potentially going to turn around. Or if it gets down to this horizontal level, it's potentially going to turn around. So it's a simple case of selling at a level of resistance and buying at a level of support. And we are just waiting for that to happen. Okay, and we can see this a little bit more acutely on the daily. There we go. There we go. You can see the level far more clearly. There we have it. I prefer to go long at this level of support, quite frankly, because this level of support is a little bit better established. Plus, but also with the trend, the overriding trend, which is up. Okay, if we look at the weekly, well, you've probably already seen this one. US dollar versus the Swedish krona, predominantly up. There we go. Okay, so I know we're at a well, going back to 2002, these highs haven't been met in a long time. 2002, we'll go back to 1993, we'll go back to the monthly and just look to see some perspective here. There we go. Now halfway up between the low of 2013 and the all-time high here. So we've got some potential upside to be taking advantage of here. New Zealand CAD, again, this has been on our watch list quite some time now. We're looking to sell this horizontal level of resistance, and indeed, if we do get a bearish pin bar reversal closing this week, we will take it. Bearish pin bar reversal inside bar, we haven't got it yet. Last week closed, sorry, this is on the monthly, my apologies. It's looking quite jagged on the weekly. There we go. We had a false twin tower reversal here about 3-4 weeks ago. It didn't quite go down, and it's reversed up. We're just waiting for a lower high in and about this level to reflect to us that momentum to the downside is there, and that the bulls haven't dared to haven't been allowed to essentially push price up any further. So this is what we're waiting for New Zealand CAD. Very much on the watch list, along with Aussie dollar, the Australian dollar versus the Canadian dollar. I would say don't trade both at the same time. Trade the one which doesn't be like the look of most. Okay, so let's go to the Australian dollar versus the Canadian dollar. I actually prefer the New Zealand versus the Canadian dollar because we've got a more meaningful level, whereas the Australian dollar versus the Canadian dollar here, it doesn't look that great, quite frankly. Okay, in comparison, there's no real level in the way. All right, so that's it really at the moment. I mean, with August coming to September, it's essentially in terms of currency trading, it has been likened to the Wild West, and you know a lot of the bigger people in the market are typically on holidays. So there's nothing wrong with you actually doing the same thing and making a decisive call to say, hey, look, I'm a trader and I've decided that I want to preserve my capital first, and I'm not seeing really anything I like, so I'm going to do what traders should do first and foremost, and that preserve capital. Secondly, to make money. Okay, and we do that, of course, by taking the very best setups. We're currently in oil long. We're still short Singapore dollar versus the yen. These are two trades we've had over the course of the past few weeks, but that's fine. They're all 3-to-1 reward to risk trades, and they've got big profit potential. So even if we take those two trades, and say even if only one wins out of the two of them over the course of like 6 weeks, and we make, because we risk 2% per trade, 6%, that's no bad return, quite frankly. Okay, so I'm going to ask you, just based on what you've seen, this kind of snapshot you've seen, this insight you've seen into our trading, I mean, how would you like to transform your trading into a carefree and relaxing hobby as well, and join us as lazy traders? It's the difference between your money working for you and you working for your money, and it's we find it far more preferable amongst many people to simply set their trades up and walk away and let the money do the hard work, rather than being in front of the screen, holding your breath, chained to the desk, agonizing waiting for the verdict of your trade. We wouldn't choose trading to do that. So this is why we're offering, in collaboration with FX Street, access to our flagship membership portal, Ultimate, which has been valued at £1,997. 1 month test drive for $30, only for today. And all you need to do to get that is use the promo code FX Street. With that membership, you get basically access to everything. You get access to all of our strategies, 10 hours plus, even more, 15 hours plus video tutorials. You'll get our weekly market analysis, Julian and contributing traders as well. You'll get access to our trade ideas whenever they happen, and they'll be drip fed into your email account. You'll also be given access to our bonuses, like the Trader Hypnosis audio course and the all-important Trade Voyager pattern recognition software, and much, much more. Even if you don't like it or if it doesn't fulfill your expectations, then you are entitled to our full refund, although we have yet to have someone do that. So in order to get this, which is only valid for today until midnight today, London time, please go to thelazytrader.com/forex-trading, read the terms and conditions, buy the Ultimate program, and use the promo code FX Street to unlock your discount. Okay? If you've got any questions, folks, please ask them now. Otherwise, I'll love you and leave you and wish you a very good week ahead.